Shellady wearing the cow jacket because I am the cow guy. And, we talk about why I wear this, but it used to bring attention to you when you're in the pits, and we used to like to attract attention so you could get some trades done. But also to remind everybody out there that even when these markets aren't trading in the pits, they are electronic, we're still trying to do a service an economic function. We're trying to set the price of food, which I think is still pretty important. So not to lose sight of the fact that some people still feel like it's gambling. It's not. We're actually doing an important economic thing. So that economic thing would be the price of food. And let's take a look at the price of food. When we jump in and take a look at that corn table brought to us by Bar Charts, want to get that in there. Wow. But I tell you what a difference a day makes. We're down to 1 3/4 cents in the September, 2 1/4 cents in December, 5.49 3/4 in Dece. Kind of losing that $6 kind of in this pie in the sky. We've rallied 70 cents in 6 days in corn, so keep that in mind. Now let's maybe take a little bit of a walk over to the soybean pit, if there was one, the virtual pit. Oh, here we go. This is a market that has not given up the ghost, but we've definitely seen some selling come in here. We're 20 cents lower now, so we've had 46 cent range in September corn here this morning. 24 1/4 cents lower in August. 14.31 1/4. That is 49 cents off of the high of 14.80. That is doing some damage. So let's take a look at what the wheat pit's doing. This all got started in wheat a few days ago, and it's still holding on to its gains. Chicago wheat up 5 3/4 at 6.98 1/4. December up 7 1/4 cents at 7.07. So without wasting any more time, I've been lucky to be joined by Chris Swift from Swift Trading. Chris, thanks for coming in.
Absolutely.
This is my first time in studio with you, which I really enjoy. And last week we had a few guests on that were giving us some anecdotal evidence about what they'd seen traveling around. Now, I've traveled from Omaha once to and from Chicago, and then down here to Nashville twice. And I kind of kept it quiet because everybody was so bowled up. And some of the country looked pretty darn good, if you ask me, And so we had a guest on late last week that said that he just drove all the way across to Iowa, and he as soon as he got to Chicago, he bought puts. So it didn't look like a very good idea this morning, but now it is.
Well, it's kind of interesting. So up through Illinois, everything varied. You saw fields from 2 foot tall to already tasseling. Some beans had filled in the rows, some had not, and I'm not talking about after wheat. And then as you got into northern Missouri, a tremendous amount of hay production. So they've really had some rain up there, and it looked like they had a good hay crop. And then all the way from central Missouri, north central Missouri, to about 30 miles into south Iowa, same thing, varied quite a bit. But then once you got into Des Moines, and I went 100 miles west towards Manning, perfect. I mean, just uniform in every aspect, both beans and corn.
So good news doesn't travel very well, but bad news does.
It does, apparently.
So what are your thoughts then on this crop? I mean, how good is the good versus how bad is the bad?
Well, I think they're probably right when they look at a 15% in the fair to poor excellent, because the majority of it is good. But I think most of what I heard is going to be the yield. Maybe not quite 179.5 as good as what USDA thinks, but, maybe a 177, 178 might be more in line.
Another thing we always do, and it trips me up every time I get excited, but, we forget about how much technology is in these hybrids, and how well they can do.
Oh, absolutely.
And you got to remember, in 1930 now, I was only a young boy back then, but we were getting about 30 bushels an acre back then, and now look what we're getting in corn. So we're going to take a quick break, pay some bills, and come back and talk about livestock.
Look forward to it.
Thank you.
Yes, sir.
Well, welcome back to Market Day Report. I'm Scott Shellady, and we're lucky to be joined by Chris Swift from Swift Trading in the studio. And we were talking over the break, Chris, about this. It's turnaround Monday, not turnaround Tuesday.
That's right.
And it looks pretty ugly over on the grain side. We'll see what that's done to the livestock real quick, and then we'll come back to it. So we'll jump in and look at live cattle. Live cattle, August off 35 cents, not anything real too dramatic over there. Last trade is 119.55, now off 62 cents. Let's go to October real quick. Off $1.12 at 124.47. Not too well. We're on our lows actually right now, so keep that in mind. Take a look at feeders as well. Feeders, we'll click down and take a look at what they've got. These are brought to us by Bar Chart, by the way. Feeders off 80 cents in August at 154.82, and we're off $1.07 in September at 157.42. So keep that in mind when we move on over to the lean hogs. See if they've got anything going for us. They've lost their strength as well. August off $1.15 at 104.50, and the October off 80 cents at 90.02. Chris, these are relatively muted compared to what we've seen happening over in the row crops. What are you telling your customers about? What I say, I'm 30% hedged right now, or maybe I'm nothing. But what do you, when you answer that phone, how are you starting off that conversation right now?
You know, really right now, Scott, not much of anything. If we look at what we're trying to do, we're trying to find equilibrium again. We blew up from the COVID and some of the instances where we've had packing, processing disrupted. So we're trying to find equilibrium, and that generally doesn't make much more than high volatility. So we still trading around the top end of the ranges, but this morning seemingly we have more news on the COVID, more mask restrictions. That tends to put people a little bit more on guard, and with high meat prices already, it just doesn't seem like it's going to go into a rambunctious end of the summer for beef demand.
Yeah, I mean, I'm not the smartest bear in the woods, but I did feel like we were trading like we found some sort of new technology over 2020 pandemic that I didn't know about, right? Because this reopening and everything was, reflation trade. Everybody was happy. We're revenge traveling even, right? I mean, but you know what? It seems to me that we've kind of come off the boil a little bit. Look what's happened in crude oil.
Sure.
Look what's happened in lumber.
Yes.
And now you see these types of moves in our markets. You kind of think to yourself, we had every reason to rally, I guess, this morning. And the people piled in last night. You've seen a 50-cent range in the beans already.
Right.
Maybe we've kind of come off the boil here in the short term with these products as well. This is going to be a very interesting week, I think. I don't know about you.
Yeah, clearly after half of the year is over with now, we're all focusing on what's going to take place, getting this year wrapped up, and starting next year. Next year is going to be huge. We're going to be a little bit deficit of corn than the years we have been in past, and we might even be actually a little bit deficit of cattle. When we get this inventory report out, we might see just a little bit of further shrinking in the herd.
Well, one thing's for sure. We're going to have enough to talk about that I'll still have a job.
Absolutely. We're not going to go away anytime soon.
All righty. Well, thank you very much, Chris. It's Chris Swift from Swift Trading. Thanks for coming in.
Thanks, Scott.
Going to have to hand it back over to Janet.